Nigerian inflation quickened at its fastest pace in almost 18 years, placing pressure on the central bank to extend its longest cycle of monetary tightening in more than a decade. Now, according to data published on the National Bureau of Statistics website, the inflation rate rose to 21.9% in February from 21.8% a month earlier. What's causing the surge? Let's find out from our correspondent, Louisa Olaniyi.
Nigeria's inflation is nearing an 18-year high. It picked up again in February, hitting 21.91% in annual terms from 21.82% in January, according to the National Bureau of Statistics data. Inflation rose in Africa's biggest economy for 10 straight months last year. This prompted a series of interest rate hikes from the central bank. The pace of price increases dipped again in December but started to rise in January. Food inflation, which accounts for the bulk of Nigeria's inflation basket, rose to 24.35% in February from 24.32% in January.
Even the market itself, the way it is, you take money to market, you can't buy anything. Before, we know how the market is. We sell, we enjoy, but this time around, you will be at home. You'll be thinking how you go to market, what to buy. So you take money to market, you can't send. Look at the way things is. The way people are even complain about hungry. Customers will come, no cash.
Core inflation that reflects underlying price pressures slowed to 18.8% from 19.2%, likely due to a chaotic rollout of a central bank plan to replace old Naira notes. The currency swap has been postponed, but it led to a scarcity of cash, which dampened spending. However, analysts differ on the impact of the cashless economy move by the government.
You are talking about retailers, you are talking about people that are into, maybe you look at the downstream sector of the oil sector, the gas stations. They're largely driven by cash also. So we have an economy that is cash driven, and again, we're stifling them of cash. No, it was supposed to be mopping up, but it became cash confiscation. They just collect the cash and don't give it back to the people again.
High inflation, weak economic growth, and mounting insecurity were major issues at last month's election. Ruling All Progressives, Congress's Bola Tinubu, who is due to take president's office in May, has vowed to address the high living costs. Despite the current situation, experts believe the economy is not doing badly. It still remains the largest in the continent, with a growth rate of an average of 3%.
We've seen unemployment rate comes very, very high. GDP still low, and so definitely it has not had any impact on our economy, because the higher the GDP ordinarily, the more employment opportunity, because that means a lot of businesses are opening up, a lot of sectors are employing. But in our own case, our GDP is low, and then our unemployment level is very high.
Policymakers have linked inflationary pressures to Nigeria's infrastructure problems and the fact that a lot of items people consume are imported.
We need proper structure, proper systems, and quality institutions to ensure that we have the right kind of policy environment. And that will require that the incoming administration have very good technical team to manage the economy. You know, we need to see less of politicians managing the economy. We want to see more of technocrats managing the economy at all levels and managing key institutions of state that impact a lot on the economy. Those things are very, very critical to get it right.
Africa's most populous nation is being roiled by internal crisis. Experts are calling for urgent reforms in all major sectors of the economy. This includes appointment of technocrats at key economic positions to boost growth.
The fear of Africa's biggest economy lagging behind the continent's smallest nations calls for worry. The incoming government of the nation sure has a lot on their table as both small and big businesses, investors alike, look forward to a more vibrant economy. From Lagos, Nigeria, Louisa Olaniyi, WION, World is One.